Hello and welcome to the June update for the Hedge Invest Benbridge Emerging Markets Absolute Return Fund. June was an incredibly difficult month for markets as recession risks began being priced in to the US and global developed markets. How do we know this? We saw PMIs tumble, ISMs weaken, the US yield curve has now almost inverted, is basically flat, and this has led to a significant pullback in commodities and a big pullback in equity markets. During the month, EM ex-China was down in the region of 12%. The saving grace for EM was a 6% rally in China that resulted in the overall index only being down 6%, as China is approximately 1/3 of the emerging markets global index. However, the rest of the world suffered worse, and we saw significant drawdowns in equity markets and had quite a difficult period in the portfolio as China exposure is very low, whereas we are more focused on Latin America, as well as tech and commodities, all of which had significant pullbacks. Why was China up? China was renewed with some optimism regarding the lifting of COVID restrictions. Exports began to normalize, supply chain bottlenecks eased a little bit, and we also had a very stable FX rate. One of the things that's been difficult for markets to deal with this year has been the incredibly strong US dollar as the Fed continues to hike rates. And yet, despite the move to a 75 basis points hiking in June, which caused the dollar to rally and most other dollar-linked instruments to fall, the Chinese currency was incredibly stable. This showed a shift in the policy around FX in China that had not been there in April, May, when the currency devalued in the region of 5 or 6%. This shift in policy gave some confidence that the Chinese authorities have let the currency slide enough, that the export growth is there, and hence we saw some bottom fishing and stabilization in the Chinese equity markets. We still think that may be too early given the inflation outlook and what's happening in the rest of the world, but markets are clearly adjusting to that outlook. We continue to see a very complicated and difficult outlook for markets in general. Inflation pressures have not eased, but we are starting to see a slowdown in growth and as recession risks increase. We continue to run a very conservative portfolio with a low gross and a low net and look to control risk and manage drawdowns. If you want to know any more information or wish to discuss the portfolio any further, please reach out to your Hedge Invest sales contact and we can arrange a call. Thank you.